Welcome to Accelerate Your Wealth, a podcast by Rebecca Robertson, founder and director of Evolution Financial Planning. We hope you enjoy the show, and please feel free to leave us a review. It really does help. Feel free to connect with us on Facebook, LinkedIn and Instagram, or head over to www.rebeccarobertson.co.uk or our sponsor, Evolution Financial Planning, for regulated advice on www.evolutionfinancialplanning.co.uk/podcast.
Hello, it's Rebecca here, and welcome to today's show. Is this the best time to invest? It's a really good question, and as a financial advisor, I'm all about stability, security, long-term planning. And telling people when they should invest is always a really tricky subject because no one's got a crystal ball. We don't know what's around the corner. Currently, the markets are trading, the world is turning, and the markets are making money. And those traders have sort of predicted the next 12 to 18 months. They're already buying based on what they currently understand is going to happen. So what rocks the market are things that are unpredicted, like Russia invading Ukraine. That wasn't predicted. What causes internal issues is when you have a government, not getting political, that shocks the city with budgetary changes which they weren't expecting. That can cause a lot of market volatility and the confidence in the British pound, and also the government of paying back those debts. So that was quite unpredicted. That was not normal, which is why sometimes things take a lot longer in government, although there's other reasons for it too, in terms of rolling things out and making changes, because there are several layers to it. It's complex. The economy is a very complex, multi-layered piece. So with that in mind, that's creating a lot of fear at the moment. So we've had the Ukraine war, we've had a change in policy of government with Boris Johnson, we've had Liz Truss, we've had a new chancellor appointed, and who knows what prime minister we're going to have by the end of 2022. So, but Warren Buffett's rule is the best time to invest is when everyone else is fearful. So if that's the case, I'd say there's quite a lot of people being in fear right now. And my audience are usually women, so they tend to be risk adverse, i.e. they don't like to take more unnecessary risk. So, but with this, when you're investing, there's always a degree of risk. Generally, the stock market, if you look at 100 years of data and a trajectory over a long period of time, it makes money. It makes money on an ongoing basis. And on average, they say around 8 to 9%, depending on how you're investing. But when you have times of fear and times of change and times of uncertainty, crisis, indecision, sitting on the fence, wait and see what happens, that's not the time to to worry and to be fearful. It's the time to count your eggs, count your chickens, and see, okay, well, what risk here can I afford to take? What amount of indecision can I afford to take? And I always like to think of it as you're not putting all your eggs in one basket and doing everything all in one go. And most financial advisors will love anything that drip feeds into something. So let's just say you've got £1 million to invest. You wouldn't just straight away put all of that and invest it all in one go. You would do that over a number of maybe 6 to 8 to 9 to even 12 months to 2 years, where you'd invest that over a longer period of time, because it creates longer diversity, reduces your initial risk that you could be buying at not the best time. Who knows when that best time is? And also, if you're thinking even smaller than that, then you might be thinking maybe it's only £100 a month that you're going to start investing. Then you are doing that when the market could be at the most cheapest, and therefore having that compound effect month on month, where then that pot in a year's time will be more than what you had originally. And therefore, when the bounce back does happen and we start to see greater returns in the market over a longer period of time, you will start to see that money grow that much quicker. So having that long-term stable effect. So how do we know when we're at our lowest point? Well, we don't really, but we can look at where things are currently standing. So if you look at the FTSE 100, that's down about 10% from pre-pandemic. So there's not great returns there. If you wanted to make quick wins, there's not great gains there, but we're still down on what we'd expect it to be at. And then if you look at sort of slightly further afield in terms of their ratio, so if you look at the FTSE 250, that's currently 30% below its highs. That's a lot more than the FTSE 100. If you look at the S&P 500, which is the most influential global index, that's about 25% below its all-time high. And if you look at the Nasdaq 100, that's about 30% off its all-time high. So you could say now's a good time to invest, because if we are at our lowest point, when that does bounce back, you will then make greater returns with your money. So it has a bigger effect. Now, do we know if that 25, 30, 10% is going to be made up in the next 6 months or 8 months or year, 18 months? This is what we don't know. And that is why investing is a long-term investment. You should never invest money that you immediately need in the next 5 years for an emergency of any kind, because even in good times, we don't know if that money is actually going to make it back to what it should be originally. Now, for people that are already invested, already have a financial advisor, already have their money invested in the stock market themselves, again, now is not necessarily time to dump out and take all your money out whilst you've had those losses. For some, it's actually a good time for them to top up their pensions, top up their investments, so that when they do bounce back, they're also then making those greater gains again long term. But whilst we're sitting in this indecision and fear, it's very hard for people to make these decisions. That might be because they're a business owner and they're worried about what's going to happen to their business over the next year. But they've got profits in their business. What should I do with it? How much could I afford to invest into their pension? And so, again, I believe in taking a varied approach to it, looking at your outgoings, making sure you've got your backup funds, that you've got maybe 3, 6, 8 months money, and then saying, okay, well, I could afford to invest maybe not all of that 40,000 allowance that I have, but I could maybe do 20,000 of it. And it's taking things in a more balanced approach, and looking at what corporation tax you have to pay and reducing your corporation tax by making pension contributions. You might not be a business owner, you might be employed. You might want to think about unemployment cover through work. You might want to think about increasing your pension contributions through your pension, your actual pension through work for your payroll. That can equally reduce your income tax as well. So there's numerous things that actually this can be a good time to invest, but it's all about making a strategic risk decision, and indecision is not the right decision. It's about knowing what your options are and making an informed decision about the level of risk you are willing to take. So is now a good time to invest? Any time is a good time to invest for anyone. It's deciding when it is right for you. I hope you've enjoyed today's show. If you wish to have any other financial or regulated financial advice, do check out my regulated website, evolutionfinancialplanning.co.uk, where we do have a financial wellbeing assessment, which is free for you to go and check out and see how that can help you. Equally, you can get in touch with me via my website, rebeccarobertson.co.uk, where I do offer lifestyle financial planning, cash flow forecasting, sessions. Now that might sound a little bit of a mouthful, but basically you want to know when you can retire, when you can reach the milestones that you wish for you and your family with the investments you may or may not have yet, so that you can make more informed decisions about your finances. So we pop that information into a lovely little tool that I use, and it lets me know what you need to be investing and what sort of returns that needs to be running at and for how long. And that will tell you how much you might be short by or what you need to increase that by. So do get in touch if that sounds of interest to you. That's rebeccarobertson.co.uk, lifestyle financial planning. And any questions, do give us a shout. You can email me on rebecca@rebeccarobertson.co.uk. Take care and have a wonderful day.
Thank you for joining us on today's episode of Accelerate Your Wealth. For further help or to connect with Rebecca directly, please head over to the website www.rebeccarobertson.co.uk, where you can find further information on our planner, book, and how to further maximise your wealth. Our sponsor, Evolution Financial Planning, for regulated advice on pensions, investments, mortgages, insurances on www.evolutionfinancialplanning.co.uk/podcast.